Hey traders, welcome to Charts and Coffee. Great to see everyone here. Yes, full disclosure, this is green tea. Yeah, I'm still rocking the tea. Lots of tasty raw honey. But we can do charts and tea. We absolutely can. Great to see you all here. Happy Monday. Hope everyone had a relaxing weekend and maybe even a little bit of a productive weekend. We have another interesting week on tap. Let's jump on over to the economic calendar for this week as we wrap up the month of October. And you'll take a look at the US data, pretty darn quiet. Not that CPI numbers out of Europe, not even that the Chicago PMI is not potentially a needle mover. Chicago PMI will probably have more potential impact than it normally would because it's just not a whole heck of a lot else to take a look at. Moving on into the first day of November. Boom, gang, we've got ISM manufacturing PMI, which I would categorize under sort of the inflation view of what's going on with the economy. JOLTS job openings, obviously a jobs number, two major macroeconomic events to kick off the month of November. Going into, of course, the big jobs number this Friday, but not before we get our November 2 FOMC statement and a look at the Fed funds rate, where it's widely expected we're going to see 0.75 of a point hike. But after this point, are we going to see those hikes tempered? Maybe half-point hikes? Can we start to see the light at the end of the tunnel in terms of where the Federal Reserve peaks and plateaus in terms of rates? And you better believe, right, that when we are looking at this data, non-farm, JOLTS, ISM services, ISM manufacturing, all this is going to have a massive impact on what it is we will expect to see from the Federal Reserve in terms of their monetary policy messaging and their actions. All right, so with that being said, let's go ahead and jump into our questions, kicking it off with Alex. All right, how you doing, Alex? Saw some green daily grab on the ES. All right, let's go take a look. Green dailies. Now, whenever we have green grab candles, that tells us a lot about where price is in relation to the 34 EMA on the high-low close. And absolutely, another thing that we had, I think someone asked me about this in the Sector Secrets Mastery, is do we have a 1, 2, 3? And if you take a look at the low on October 13, the high on October 19, the retracement on October 21, and then taking out the high from Wednesday, October 19, boom, there's your 1, 2, 3. And the most important part of this is that the breakout through that 2 high point, that swing high there, that has to happen in a neutral market. And there you have it. We're still below the 200. So there's still, kind of a bearishness overarching all of this, but that is a 1, 2, 3. So, and I think as that happened, you can see the momentum went bullish, but not the trend yet. A couple of green grab candles is bullish, but bullish is not the same as a trend. And bullish momentum is back. Yeah, bullish momentum is back. I agree. Yeah. All right, next up, Prince asks, when looking for a breach retreat setup, it won't always dip into the highlighted zone. Correct. So that's any entry, right? If I'm looking at HPMRs, it may not enter the zone. If I'm looking at the wave, it may not enter the zone. So breach retreats are no different. Absolutely. Is it valid to buy at higher levels? I can't even begin to answer that question, Prince, because there's so many variables. Could you? I mean, the simple answer is yes, but there's always got to be a setup, right? There's always, so the question is then, what is the alternative setup? And that would just have to be something that we take as we see, right? So for example, if we're in the mastery and I've got a breach retreat, but I've also got a wave setup, or I've got a breach retreat, but I've also got an HPMR, or maybe we've got a V-score bottoming, right? Those are 4 different setups, 4 different looks at the market. a pitch across the plate, as I like to say. And it really depends on which one of those four we've got. So the simple answer is yes. The slightly more specific, correct answer is it depends what it is. And that's why we get together in the mastery every morning, like we will today. We'll be together for an hour and we'll see what kind of market we do get. So thanks for the question. Zion Spear, do I have an indicator alert for a minor low, minor high as they develop? Yes, the specific one that's tied to the Darvis is the one that I probably use the most, the Darvis 3.0, and that's on all the minor lows. That's on all of them. I would highly recommend before automating anything, we want to know what it is we're looking for. And minor lows and inside days, those are two of my favorite patterns. They take 2 to maximum 4 candles. And once you understand the pattern, you'll just see them everywhere. So I would prefer, before we automate, at least understand what it is we're automating. But the simple answer is yes, the most powerful ones are built into the Darvis 3.0, but it's not all of them. So I want to make sure that, yeah. So I want to make sure that it's not a, it's not a crutch, right? For us learning actually what it is we need to do. But to your point, it is handy to have that automation, no doubt, right? First, we have to understand, then we automate. So love the question. And yes, I use the one mostly. I'll lean on the one from the Darvis 3.0. All right, next up is Mr. Walker asked, what are the current trends I see in this market? Huge question, Mr. Walker. I really don't have a lot of trends that have caught my eye apart from energy. Probably the most obvious are oil stocks. I mean, that's your most obvious trend, I would say, in this market. And I like obvious because obvious has what? Attention. And where there's attention, there is volume. So that's definitely something that, I'm not looking for the trend that's going to happen. I'm not trying to be the first one there. Nothing like that. I'm not trying to front run my process. Nothing like that. The idea is most definitely to think about where is the attention, and where attention goes, that volume flows. All right, next up is Eric. Good morning. Does the current market action look more like a bear market rally or the start of a trend reversal? Thanks. So Eric, I understand the psychology behind why there's this overarching definition of what's a bear market. And it's what? A certain percentage from the highs. The only reason we collectively call something a bear market is because it's repeated. That's how it's been defined. And the definition is really pretty, random, if you ask me. Why is a correction 5%, but a crash is 20, but 5, 10, 20, they're all pretty basic numbers that we just arbitrarily have assigned to the market to mean something. Great question. Because if that's the broader expectation, if that's the broader implication, then clearly that is the overarching psychology that people are going to operate with. For me, Eric, what's been far, far, far more accurate is to be a hesitant bull in a neutral market below the 200 exponential or simple, and to be a far more confident bull in a neutral or uptrending market above the 200s. That 200 is the big thing for me. If I'm looking at a trend break, so let's not go right to a reversal. Think of it in stages. If I'm going to take a hairpin turn, U bottom, U top, V bottom, V top, I'm going to slow down. I'm going to decelerate. I've got to shift. And for a brief moment, I've got to get neutral before I go the other way. And the market's no different. V bottoms are usually caused exclusively by the Federal Reserve. U bottoms are a little bit slower. W bottoms, 1, 2, 3 tops and bottoms. Those are the kinds of things that I look for because it reflects the fact that there's an adjustment. There's a battle between buyers and sellers happening. It just isn't a sharp reversal. So I'm going to treat this as a price-based downtrend break. And I see also that the pattern that I would look for, also price-based, is kicking in. And remember that from a volume perspective, we've been bottoming out on volume for, let's see, September 22nd, Before that, it was, let's see, I'm sorry, September 27th, September 30th, October 10, 11, even we can say October 14. We've been bottoming out along volume support at the -2 standard deviation for quite some time now as we go into November. That to me is the beginning of where the bottoming process continues to become more and more valid. In fact, we're even making volume highs. So we know there's higher lows, or lower, higher lows and lower highs in the market via price. What about higher lows and lower highs in terms of volume? So I'll look at those trends as well. And so for me, the simple answer is I am looking at this based on what I see as a trend reversal. Yes. All right. Next up, where does one find the trend DeLorean indicator? So, Darius, if you've heard of it, one of two places you have heard of it, and thank you for the question. You've either heard of it from the countdowntrader.com or my last webinar, which was Tuesday. And you can get it with my current class, which you can get over at simplertrading.com/volume. All right. So, thanks for the question. Next up, Martha asks, if I have a $10,000 account and are trading futures and can only afford one contract, but I enter the agro moderate conservative. Well, it depends on what it is, Martha, because if I have a $10,000 account and what I'm trading does have micros or does have options contracts, that opens up completely differently what my possibilities are. So if I'm trading futures and I have access to options on futures, as well as if I have micros on the futures, those are things that allow you to open that question up to not which one do you have to choose, but how can you fill a position across those three triggers? All right. So I hope that makes sense. Zane asks, how come I don't use an hourly chart? Zane, I also like mustard on my French fries. And I say that only somewhat silly because it's just a preference. A lot of people like hourlies. Cool, right? I don't. Yeah, I just don't. Actually, you know what I like even better than mustard? I like that brown vinegar on my fries. So it's really preference is really what I'm trying to say, Zane. There's no one perfect time frame. I would never go so far as to say, well, the ones I'm using are perfect. They're not. They're just perfect for me, right? So with that being said, a little bit more specifically, the 1 hour was great and still is when I'm trading Forex because I quite literally have a 5.5 long day. I mean, the market doesn't close. It doesn't even take a nap. 5.5 days. So that 1 hour has a really nice flow. On markets that close a little bit more frequently, futures, 1 hour is okay. 1 hour is okay. On stocks, I don't like them at all. The idea that the 1 hour, and here's the other problem I have with the 1 hour. Is it an intraday time frame? Or is it a time frame that I can take overnight? Right? That's another question I'll ask myself when I'm setting up trades. Is this a time frame that I want to day trade with, where I'm going to be flat at the end of the day? In which case, I'm going to use a 5-minute chart. And then if it's a time frame that I want to take overnight, maybe a 1 hour starts to make sense, but I'd rather just use the daily because that's going to not only take me overnight, but that could take me for weeks, if not months. A 1 hour won't be able to do that. So for me, it's a funny little time frame that doesn't suit, again, just my purposes properly. But I will say this, any indicator that you use and you decide to put on your charts, make it earn its spot there. I like to say, it's got to earn a spot on the roster. And my litmus test for any indicator that I use or I have created, and most of what's on my screen are things that I've created for myself. They have to be both universal and robust, meaning they have to work well and they have to work well in everything. So while I don't use a 1 hour, I do have members that use 15-minute time frames, 1 hour time frames, 4 hour time frames. It's just a different expectation for how long you're gonna be in the market, which is to say it's a different expectation for time horizon. All right. So thank you for the question. Great question, Zane. I appreciate that. All right. Is the trend DeLorean? Oh, the trend DeLorean. Oh, yeah. I'm answering a question from Simpler. The trend DeLorean is not a standalone. I don't want anybody thinking that anything as a standalone, because one of the things that I'm teaching in this class is this idea that we need to have one pattern. There is a way to trade one pattern, but one pattern doesn't mean one candlestick pattern or one secret squiggle pattern or one singular thing. The pattern is made up of, just like if I call something a cupcake, what's in a cupcake? Flour, eggs, sugar, right, etc. I don't bake, but easy analogy. What's in that cupcake? Well, the same thing is what's in that setup. And what's in that setup is volume, trend, price. And you put all those in, boom, I've got this setup. And so nothing is standalone for me. I'm always looking for my indicators to measure different things. My volume tools, of course, measure price-based and time and date-based volume. My multi-trend measures the trend. So I've got all these ways to measure, and in that way be as process driven and unbiased as possible. The indicator is what it is, right? It's either at the bottom of the range or it's at the top of the range. It's either support or it's resistance. We want that much a binary approach. And if we can do that, we can make cupcakes all day long. So that's the way that I look at that, in terms of standalone indicators and, one thing that's going to get me in. No one secret squiggle alone gets me in. It's a secret squiggle. It's the underlying market structure. And then finally, it's some sort of price pattern or level, right? Okay. Thank you very much for the question. And all right, looking for clarification. The minor low sets up and does not complete by candle 4. It's no longer a valid day. It depends on what kind of minor low pattern you're looking at. So we could have a minor low. It could take up to 4 candles to form if we have an inside day in there. And then we can also have narrow range 4 patterns, right? So there's a lot of different ways we can look at it. But once you understand the building blocks of each and where the breakout levels are or breakdown levels are or where the validity is, then you're not even as concerned about, does it take 3 candles or 4 candles, or, where is it valid or invalid? What will happen at that point is what the triggers are based on the structure of the pattern. But as a general rule, I don't want patterns to take a long time, because there should be definitely, to your point, right? What's the concern? Is this pattern kind of going stale? Is that attention and that excitement sort of waning? And that's not going to help us. So yes, to a certain degree, I'm not going to give a pattern, 10 candles to sort itself out. The quicker, the better. It's no different with a lot of things. I want a quick reaction. I want a quick acknowledgement. And it does tend to be higher probability when we have that. All right. I'm futures trading too, so hourly made more sense personally. Yes, for futures trade, again, it's not just whether or not you're in a 24-hour market or a nearly 24-hour market like Forex and futures, but also, Zane, what is and some people might say, well, Wog, I don't know how long I'm going to be in. To some degree, we do. To some degree, the market's going to tell us where that cutoff is. If we're closing in on first notice date, there's your cutoff. If you're day trading and you won't have access to day trading margin, there's your cutoff, right? If you have earnings, perhaps that's a cutoff. If we have options expiration and the time decay starts to affect the value of the premium of the option, that's a cutoff. So there's a lot of cutoffs that'll be imposed on us. We know every trade has a time horizon. The more clear we are about that, which is why I'm so segmented with my time frames. If I'm looking at a 5-minute time frame, I am not taking it past the bell. Heck, I'm not usually taking it past 3:50 p.m. if it's a U.S. session day trade. So each time frame for me is anchored to, this is the style that I'm trading. Daily, this is the style. This is the time horizon. Weekly, this is the style. This is the time horizon. So by not having a lot of time frames, when I look at a specific time frame, immediately I'm in line with how long I might be in the trade and what the setups potentially are. And there's no confusion as you're in the middle of, well, what's a 1 hour? Is it a day trade or not? Right. And I don't have that confusion. And when there's less confusion, I can get to the trade quicker and I can get there more confidently. So the elimination of timeframes under consideration was very purposeful. And it was there to help traders say, well, Rog, do I use a 2-minute or a 5-minute or a 10-minute or a 3-minute or, what is it? And I have very, very strict rules for what we do for each. And rules are what, it's so funny. I'm taking a class right now with, I don't know how many of you have read anything from Stephen Kotler. He's brilliant. His specialty is flow. And um, I don't know if any of you have read about flow from Mihai, Csikszentmihalyi, and he really has gone forward with that work. And flow is really interesting. Flow is much more akin to play. It's much more akin to community, challenge, enjoyment. But one thing that's really interesting about flow in terms of getting in that flow is a certain amount of clarity of purpose, rules, right? They even look at proper play needs rules. You think play needs no rules. Watch kids playing with each other. When one of them breaks the rules, the whole game falls apart. So those rules are really what allows me the freedom, frankly, to play this game called trading. So I hope that makes sense. We're always looking for flow. Confusion, too many choices are going to impede flow. No doubt. Been there, done that. All right, gang. As always, thank you so much for being here for Charts and Coffee. This Wednesday, we're going to have webinar number 2. So my day traders out there, you are not going to want to miss this one. And just to give you an idea, we have been at a 72% win rate with what I'm going to show you on Wednesday since mid-June. A lot of our sector secrets folks will say, Raghee, I'm doing better than that. But that's been about where I've been in the day trading, and you'll see what I'm doing and have been doing since then. You can register for that over at simplertrading.com/money. All right, gang, I'll see you tomorrow, same time, same station, and Wednesday evening, 8 p.m., simplertrading.com/money. I'll see you then. Be good to each other.